Interest rate hikes are off the table, but it might be a while before we see any rate reductions. The Prime Minister Anthony Albanese demands an explanation for why an Australian aid worker was killed by an Israeli airstrike. And the big banks and supermarkets band together to avoid a cash crisis. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 3rd of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you're speaking today with Warren Hogan, who is the Managing Director of EQ Economics, Economic Advisor at Judo Bank and the former Chief Economist at ANZ.
I don't think Warren would mind me saying he's a veteran economist. He has been around for a while. He has seen a lot. That's why we like talking to him, because he really understands the economy. He's been right on interest rates for a couple of years now too. So we asked him all about what happened at the Reserve Bank board meeting a couple of weeks ago. I've got more on that shortly. What he thinks will happen to interest rates and his take on the economy generally. It's a great chat, particularly if you are interested in interest rates. Not necessarily good news from Warren. That's what I'd say.
No, and what I like about Warren is that he's not afraid to make a big call as well.
He's not.
And chances are, based on his track record, his big calls are often right.
Yeah.
So it's definitely worth a listen. But that is really the main story as well this morning. The board of the Reserve Bank did not explicitly consider a rate rise at its recent meeting, but any rate cut could still be many months away.
Yeah, so the minutes to the board meeting held 2 weeks ago showed that a run of data gave the board more confidence that still high inflation is tracking lower as expected. That's the good news. The board is at something of a loss, though, about what the next move will be. Now, it didn't explicitly talk about rate rises. That's the first time that's happened for a couple of years. So we like that. It's also difficult to see when they're actually going to push rates down, exactly when that might be. While consumption's been persistently weak, business investment and government spending has offset much of that weakness. Demand continues to outstrip supply, meaning higher interest rates are still needed to close that gap. Of course, you need demand equaling supply to have a stable economy. The minutes show how concerned the board is about the housing market. The highest population growth in 72 years, alongside a post-pandemic preference for living with fewer people, means demand is high. On the supply side, new housing has been held back by capacity constraints, particularly for finishing trades, think painting and glasswork, that type of thing. The Reserve Bank's comments come as prices in Perth, Adelaide and Brisbane last month hit new highs. Sydney isn't far off that. The upshot is higher prices and rents, according to the minutes. Now, an added complication from the housing sector for the Reserve Bank is that lower interest rates will only fuel demand for housing, pushing prices and probably rents up further.
Okay, so using kind of, I suppose, self-interest to kind of cut through all of this here, Sean, where does this leave all of us homeowners? When's the first interest rate cut actually coming?
Excellent question. The Financial Review did a survey of economists. Consensus was November this year. Financial markets have priced in a cut in September, but there's a growing number of experts, including Warren Hogan, who we speak to after this show, who think that the first cut might not occur until next year now. That's on the back of a still strong labour market and the associated wage pressures, and an inflation rate that's only slowly heading back towards the Reserve Bank's target range of 2 to 3%. The bank's board seems to be saying they just don't know at this point of the economic cycle when the official cash rate will change again.
All right. Yeah, well worth a listen, though, to Warren Hogan after the show. It is a great interview. How did local markets perform yesterday?
Well, the S&P ASX 200 closed down slightly to 7,888 points, but not before hitting a new record in early trading. The benchmark hit a high of 7,910.7 points in the opening hour of trading. Broadly, oil and mining stocks did best, while telcos, healthcare and property companies tended to underperform. BHP was a strong performer, up nearly 2%, while Santos rose 1%. The banks were mixed, while Fortescue Metals, Wesfarmers and Goodman Group all dropped by more than 1%. The higher price of gold has helped the miners. West African Resources, Evolution Mining, Gold Road Resources and Newmont Corporation were 4 of the 5 top performing stocks yesterday, at least among the ASX 200. Bit more corporate news around. We had earnings season finish a few weeks back. Everything went quiet, just picking up a little bit, Michael. Yesterday, Aurora's share price tumbled 14% after it said earnings from its French bottle manufacturer Saverglass will be lower than expected this year. It also expects softer growth in its core packaging business. Aussie Broadband's share price ended about 1% higher, a little less than that, after confirming it had cut its stake in rival internet provider Superloop to just below 12%. It had hurled about 20%. It failed to get a court injunction last week to stop the sale that was forced upon it from overseas regulators. Anyway, it's down to 12% of Superloop. Paladin Energy jumped 5% after producing its first load of uranium from its mine in Namibia. And biopharmaceutical company Mesoblast jumped another 70% yesterday as investor excitement surrounding its pending US food and drug submission continues to build. Last week, the US FDA deemed recent trial data good enough to allow the company to resubmit a previously rejected license. Now, Mesoblast's share price since that decision is up around 180%. That's about 3 trading sessions. Tuesday, Wednesday, Thursday, and yesterday. 4 trading sessions, Michael. 4 trading sessions up 180%.
That is extraordinary, isn't it? And a couple of years ago, it would have been nearly actually just over 2 years ago now, you spoke to Silviu Itescu, who is the founder and CEO of Mesoblast, about the kind of process that they go through and the challenges. There's so many kind of hoops and regulatory hoops and necessarily so that they have to jump through. But and there's massive fluctuations that they can see in the share price. And then we're seeing it play out day by day right now.
Yeah, because now it's up almost 200%, as I said, in the last 5 sessions. About August last year, it was at this levels and then got the bad news that the data it had submitted wouldn't be good enough. I think it was phase 3 trials. I might be wrong on that. And its share price tumbled. It's been wandering along the bottom there for a while. And suddenly, the FDA said you can resubmit. Its share price absolutely booms. That interview is fascinating. I reckon we might run that on Sunday again, Michael, because it is a really fascinating insight into how the whole Food and Drug Administration in the US works and what it means for share prices and that type of stuff.
Yeah, I think that's a really good idea. Every Sunday we release a Sunday feature, which is usually an interview from the archive, from the Fear and Greed Vault, which sounds very kind of glamorous and high security. Really, it's more of a spreadsheet, isn't it? Which has our colleague Adam Lang salivating at the prospect. But it is a good opportunity to kind of highlight some of these interviews that are really well worth revisiting. So we'll do that this Sunday. So stay tuned for that one. International markets, what's going on?
The S&P 500 fell back from its record high to start the new quarter just a touch lower. Wall Street's benchmark was down 0.2% yesterday morning, with real estate, industrials and healthcare stocks all lower. As it was last year and will be for most of this year, the move reflects interest rate expectations. Now, it's worth having a look at the Magnificent 7 tech stocks. As has been the trend this year, the share prices of Amazon, Microsoft, Meta, Alphabet and especially Nvidia all closed higher. But Tesla and Apple lost ground. Tesla's now down nearly 30% this year. Apple's off 8%. Nvidia, by contrast, is up not far off 90%. When it comes to the largest companies on Wall Street, Michael, Microsoft, the number one company in terms of market cap, is now worth $500 billion more than the former number one, Apple. Quite a remarkable turnaround.
Yeah, and in quite a quick period too. Yeah. That has not taken long.
And then the number 3 company, Nvidia, is now about $400 billion smaller than Apple. Now, I know obviously that's a lot of money, but only a couple of months ago it was about half the size of Apple. So it's quite phenomenal what's happened there.
Extraordinary.
Away from equities, the on-again, off-again debate about US interest rates is heading all asset classes. The latest thoughts are that rates might stay a bit higher for longer on the back of solid economic data. In response, Bitcoin tumbled 5% yesterday to be trading around $66,000 a unit. The Aussie dollar fell back below 65 US cents. Bond yields are up a touch. Iron ore rebounded somewhat from Monday's drop. It's fetching back above $100 a tonne. Gold remains around record levels while oil prices are steady.
All right, there is a fair bit going on. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has requested a meeting with the Israeli ambassador for an explanation as to why an Australian aid worker, Zomi Frankum, was killed by an airstrike in central Gaza while working for the World Central Kitchen.
An angry Prime Minister said Ms. Frankham's death is completely unacceptable. Reports say the 43-year-old aid worker was among 5 people killed by the airstrike in central Gaza as they helped deliver food and other supplies for that non-profit organisation, World Central Kitchen. Citizens from the UK and Poland also died, according to media reports. Mr. Albanese called the news tragic, saying Ms. Frankham's was doing extraordinary, valuable work, volunteering to provide aid. He repeated Australia's position of supporting a ceasefire in the region and an end to the conflict.
Now, Sean, the federal government is offering Australians a voluntary digital ID that works across the economy.
Yeah, so it's basically like the MyGov ID, but it will work beyond the federal government into other private sector services and not just within the MyGov portal. Finance Minister Katie Gallagher was at pains yesterday to highlight it's voluntary. People can use their physical ID, such as a licence or passport, to establish the digital ID. Then when you operate in the economy, think about banks or utility companies or something like that, you can use that digital ID to establish who you are without needing multiple forms of identification. The legislation passed the Senate last week, so it'll soon become law. I love this idea. I have nothing to hide, so I don't really have a problem with having a digital ID. I just think it'll make life a lot easier.
Yeah, and certainly from a cybersecurity perspective, I know that was one of the big arguments in favour of it, that all of a sudden you don't necessarily have banks and utility companies, a whole bunch of others requiring you to submit a whole lot of personal identification and for them not to have to store it anymore, which is really where the big risk comes from.
Yeah. And it's let's say, certainly the banks and the utility companies, but some of the smaller providers around the place who just don't have the secure networks that the banks have, for example, I think that's where we'll actually make some real gains.
Yeah, no, it's a really interesting one. Now, a story that we mentioned last week, Sean, when it was kind of brewing. It was a crisis brewing at the time. The competition watchdog is now going to allow the big banks and supermarket chains to work together to attempt to avoid the collapse of Armaguard, which delivers cash around the country.
It is a cash crisis in that it is uneconomic for Armaguard to continue cash deliveries across Australia. And it's the only operator. It's been bubbling along for months, and rescue talks have involved the Reserve Bank and the big users of cash like the banks and the supermarkets. Aussie Post has been in there. The banks and retailers offered a $26 million funding deal last week. It fell over after Armaguard refused to open its books for due diligence. Complicating things are concerns that if people think there might not be much cash available, what do? Well, they go to the bank and take cash out. It basically exacerbates the problem. According to the Reserve Bank, there's about $100 billion in banknotes in circulation. Now, between 55 and 80% of that's actually hoarded. So crazy as that sounds. But it is a real problem because the supermarkets and the banks need cash. People need cash. But if it's uneconomic, who knows what's going to happen?
Now, more than 100 armoured vehicles will be made in Queensland, bound for Germany, under a $1 billion defence deal announced by the Prime Minister yesterday.
That's right. Mr. Albanese said it is the single largest military export agreement ever. For Australia, the German Parliament has approved a plan to buy the Boxer heavy weapon carrier vehicles. They'll be built by a German subsidiary that operates here, Rheinmetall Defence Australia. It is out of Queensland, and the deal is expected to create around 600 direct jobs.
How about this? Data from the Australian Electoral Commission shows large corporate donations to the Yes campaign in last year's referendum.
ANZ led the way, donating $2.5 million. Woodside Energy provided $2.1 million, while Commonwealth Bank and Westpac both stumped up about $2 million. Wesfarmers, Rio Tinto and BHP all donated about the same. Other corporates to donate $1 million or more included Woolies, Telstra and Lendlease. However, the biggest lump of money came from the Paul Ramsay Foundation. It's a philanthropic fund. It gave more than $7 million to the main Yes campaign vehicle, Australians for Constitutional Recognition. Now, that group, Australians for Constitutional Recognition, spent about $44 million on the Yes campaign. It was obviously the organisation that received most of the donations, $44 million on the Yes campaign. No corporates provided significant sums to the No campaign. Now, the two main No campaign vehicles in total spent about $22 million, about half that of the Yes campaign. And of course, the No side absolutely walloped the Yes side.
Now, Korea's Hanwha Group has made a $1 billion takeover offer for ASX-listed Austal, though the board of the naval shipbuilder has already rejected the bid.
That didn't stop Austal's share price from jumping 10% yesterday. Hanwha is a defence and aerospace conglomerate and says it is a credible buyer and the offer is highly competitive. But Austal's board says it isn't satisfied that the bid would secure the necessary approvals from defence agencies in Australia and the US. Austal designs and builds defence vessels for the Australian and US navies, and some of those contracts include a commitment to ensuring continuous naval shipbuilding in Australia. Hanwha says a takeover would support Australia's alliances and support national security.
Shipbuilding is kind of a high-risk word to say, isn't it, many times over?
I like that's what you took from that story. So it's $1 billion takeover. There's national security at play. We're talking about it. It's serious stuff. And you say shipbuilding.
Yeah.
Say that a few times fast.
I was just here giggling at kind of your kind of mouth contorting around the word going, he's going to slip up here. He's going to say it. He's going to say a swear word. Because apparently I am about 13 on the inside.
13. That'd be good if you got to that level.
Oh, thanks. Now, international news time. Donald Trump has paid a $175 million bond that allows him to appeal a civil fraud verdict and prevents the state of New York from seizing his assets for now.
The bond prevents enforcement of a $454 million penalty against the former president levied in February for lying about his assets for years to get better loan terms. Trump is appealing that decision, but if he fails, he will have to pay the full amount. Which brings me to the state of Donald Trump's wealth. Bloomberg is reporting that his net wealth fell by about $1 billion after Trump Media and Technology Group's share price fell 21% yesterday morning Australian time. That's after it disclosed a loss last year. It means Trump's net worth is down 14% to about $6.4 billion. Trump Media generated just $4.1 million in revenue last year. That ain't much. The most recent figures show that Truth Social, the former president's own social media platform, has about 9 million signups.
All right, one last story, Sean, a really serious one to finish on. Israeli warplanes are suspected to have bombed Iran's embassy in Syria in a strike that Iran says killed 7 of its military advisors, including 3 senior commanders.
It has a major escalation of Israel's wars in the region, particularly given a senior leader of Iran's Revolutionary Guards was killed. The Iranian foreign minister condemned what he called a terrorist attack in Damascus. Israel has long targeted Iran's military installations in Syria, but the attack was the first time Israel hit the embassy compound itself. Now, Israel has ramped up strikes in parallel with its campaign against Iran-backed Palestinian group Hamas.
Okay, up next is the Fear and Greed Daily Interview. Warren Hogan, Managing Director of EQ Economics and Economic Advisor at Judo Bank, is your guest.
Yes, basically all about interest rates. What's going to happen? When are we going to see rate cuts? I don't think Warren's the most optimistic. Well, it depends where you're coming from. He's an optimist as general person, but if you're a homeowner, maybe he's not the most optimistic economist out there.
It's not the best news, really, but it is definitely a great interview and worth a listen. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, today's Wednesday.
Oh, excellent. How they afford that about?
Well, today is it's a big episode today. It's a bit of a special episode, and it's one that I think a lot of listeners of this podcast might be interested in because it actually features our own Fear and Greed colleague, Adam Lang, as a guest in the studio because one of Adam's many jobs, he's been kind of the CEO of an ASX-listed company. He's a kind of a CEO coach. He's an executive coach. And today on How Do They Afford That, which is our sister podcast, really all about money and personal finance and all that kind of thing, we're trying to answer the question, is it time to quit your job? Because it's all about kind of, are you being underpaid? How do you kind of negotiate to kind of get not just more money, but also kind of more opportunities and more potential to actually improve kind of where you are going in your job? Also, what does burnout look like? And if you do decide that it's time to quit your job, how do you make sure that the next job that you're going to, the next position that you're looking at is actually going to be an improvement? How do you negotiate ahead of quitting your current role to make sure that the next one is going to be better? So we kind of cover all of this with Adam, and it was a really interesting conversation.
I look forward to it.
You can find How Do They Afford That wherever you listen to podcasts as well, and I'll put a link in today's show notes just to make it really, really easy. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 3rd of April, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.